Leave it to Apple, Amazon, young Biden, and Janet Yellen to save the day here today. Apple, Amazon killed earnings. Apple earnings were a little bit worse. Amazon actually guided down lower about 15%, but somehow they managed to do it. Amazon is up 12.40% here in after hours, as well as Apple is up 3.25%. These are some pretty big moves, and these stocks control over 10% of the S&P 500 weighting. So what's going to happen next? That's everyone's question. Who cares about what is happening right now? What is going to happen next? How is this going to affect AMC? As you guys can see, this is no joke. AMC is up 0.69% in regular trading and up 0.69% in after hours, no pun intended. Now, let's get into all of this key information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in that comment section, baby. Let me know, how are you guys positioning in this market? What stocks are you buying for the short term and the long term? Let me know that information. And if you guys want to come trade with me live in real time, link down below in the description. Now, Apple beats on revenue and profit, expects growth to accelerate despite pockets of softness. Now, Apple is widely known over the past 2 years to not really give guidance, but they are seeing pockets of softness in their business and somehow expects their growth to accelerate. So if anyone could do it, it's going to be Apple. So I'm not going to bet against Apple here, at least not going ahead into the future, because who knows? I want to see some audited results here because these numbers are quite crazy. But if you guys are hoping for this bullish rally, well, it looks like Apple's going to give it to us. So EPS is $1.20 versus $1.16 estimate, down 8% year over year. So actually declining year over year growth of 8%. Revenue $83 billion versus $82.81 billion estimated, up 2% year over year. iPhone revenue $40.67 billion versus $38.33 billion estimated, up 3% year over year. Services revenue $19.60 billion versus $19.70 billion that was estimated, up 12% year over year. Other products revenue $8.08 billion versus $8.86 billion, down 8% year over year. Mac revenue $7.38 billion versus $8.70 billion estimated, down 10% year over year. iPad revenue of $7.22 billion versus $6.94 billion estimated, down 2% year over year. And gross margin 43.26% versus 42.61% that was estimated. Holy gross margin, that's ridiculous. If there is one case that you could make for Apple's valuation, which is a tough sell to me at least, it's the 43.26% gross margin. That is insane. So it's no surprise that Apple is up right now, and Apple is still up about 4%. About 4% right now. The earnings call is going to be starting here shortly. Depending on what they say, that could move around the stock, but it looks like just Amazon and Apple across the board. I mean, they killed it. I was wrong. There's no other way to put it. I did not expect demand like this, and we might avoid a recession completely based off of these numbers that we are seeing. Possibly a recession is canceled at this moment in time. You can't see earnings out of Amazon and Apple this good and be going into a recession. Or in a recession. That's just, might trigger some people, but that is just simply not possible. So I have no choice but to be bullish on these earnings and potentially bullish on the stock market going ahead into the future. What it looks like right now, investors are becoming more comfortable acquiring stakes in companies or adding to their positions with still high multiples. I mean, Apple is a 26 PE multiple stock. That is much higher than where even a Facebook is at a 13 PE ratio. Even if you're seeing year over year declining growth like Apple is seeing of 8%, that does not mean investors will not buy that stock. So no choice but to be bullish here, and it looks like we might delay, if not completely avoid, a recession after these earnings. You are also seeing the yield curve, which is uninverting a little bit today. Now we're only inverted about 20 basis points. Still the worst yield curve inversion we have seen in 20 years. But going ahead into the future, that's what everyone wants to know. If you guys can't tell from earnings, it's bullish. Now, what is going to derail the markets from here is data that we get. If we start to get good economic data, that's going to be bad. That's going to tell the Fed they have a lot of room to keep raising rates. If we start to get more high CPI and PCE readings, that's going to be bad as well. The Fed will continue to raise rates, but this is something that could take months and months from now before the markets might start to care about that again. But it just means we're going to see volatility for a long time, at least over here in the short term, over the next 3 to 6 months. You're going to see so much volatility, it's going to be crazy. You're probably going to want to quit the stock market. Now, the first bit of data coming tomorrow that could actually derail this rally just a little bit, pour some cold water on an otherwise pretty hot stock market rally right now, is the personal spending month over month for June. Comes out at 8:30 in the morning. Personal income month over month for June. But the biggest thing Fed Jerome Powell actually said yesterday was the employment cost index quarter over quarter for Q2. That is something they want to pay very close attention to, as well as the employment cost for wages and the employment cost benefits. But also the main metric of inflation for the Fed is PCE. We get PCE data for the month of June that comes out at 8:30 in the morning. PCE year over year, month over month, core PCE and regular PCE. You also get the Michigan Consumer Inflation Expectation Survey, and that will be important, as well as the Michigan Current Conditions Final Survey for July. So all of this, in a nutshell, earnings are going to have a bullish effect, at least for probably the next couple of days, if not, tomorrow at the very latest. But if we start to get the Fed and the Fed futures market pricing in more rate hikes, well, I don't think earnings are going to matter too much, because people will start to price in a slowdown even more, and the Fed not taking their foot off the gas pedal. If the markets start to feel like the Fed has to raise rates no matter what happens in the economy, well, that is not going to be such a good thing for equity markets. But as of right now, guys, the markets are killing it. I mean, they're killing it. This rally necessarily shouldn't be happening. Earnings have not been great really across the board, but they are good enough. Now, in the light of AMC stock up 0.69% in regular trading, up 0.55% here in after hours, driven largely by these company earnings that we are seeing. And on a technical basis, yes, today we did have a very wide range. We were up, we were down, but we did manage to close green. And on the upside today, we did hit a high of about $15.32 per share, close to that 100-day moving average at $15.42 per share. So that, in my personal opinion, is a bullish thing, that we did try to test the moving average so soon after we have fallen under it. And the fact that we did not get quite to the 50-day moving average at $13.55 per share. Now we are over $1 higher than that moving average, so I think that is in and of itself a bullish thing. Now the RSI is at 49.63, so slightly under that neutral level, and you also see the MACD that is going pretty extremely bullish, bearish at this point. You're starting to get a very deep divergence going on right here, but obviously it looks like we're probably going to see a bullish reaction in the markets. So until we get bad data, until we get something that spooks the markets, I think I think the broad markets are probably going to continue to melt up to the upside. On the S&P 500, I would really look to target possibly around that 200-day moving average, around 430 is probably going to be the highest that we're going to go before the Fed does ultimately U-turn. At that point, you're not far from all-time highs of 476. That would be about 10% from all-time highs, so that would only put the S&P 500 down about 8 to 9% for 2022, and that doesn't seem too reasonable in light of everything that is currently going on. So is the bearish story over? No. Is the bullish story here? Yes. Is it here to stay? Probably not. But I mean, if you have any bearish positions like I do, I mean, you're probably going to get a little bit clapped. But hopefully you got a nice fat long term, and your short positions were only, a couple percentages of your overall portfolio, because your long term is going to save you here in this market, especially when the markets can act irrational longer than you can remain solvent. Because don't get this confused, we are in 2022. This is very irrational behavior. In a normal market, in a normal year, Apple running up 20% into earnings would probably not have delivered a 4% positive result, even after their earnings were, in all reality, not that great. So that's pretty much going to be all for this video. We're going to look at AMC or Tech Data, and then we will go ahead and wrap it up. So let's go ahead and refresh the page, get these options pulled up, and we can see 5 orders totaling $210,37,000. Positive order value of 35%, so not looking all too bullish as far as option activity, but we have had our fair share of bullishness on the option chain over the last couple of days, so nothing to complain about there. The value of shares that is currently sold short sits at about $1.46 billion. Estimated short interest of free float 19.56%. Free flow out on loan about 28%. Shares out on loan 144 million. Days to cover 3.44. Cost to borrow of 9.8 and 100% share utilization. So can't argue with those numbers. Looking pretty good. Cost to borrow average of 10.03%. Cost to borrow max of 11.38%. Cost to borrow minimum of 8.84%. So in light of all this information, if we continue to get a bullish rally in the markets, we're probably going to see a pretty bullish reaction in AMC stock as well. So that is going to be it for this video, ladies and gentlemen. I hope you guys are happy, if not satisfied, either which way the markets did throw your portfolios around today. Make sure you guys got that long term so you can take advantage of all of these gains when the stock market gives them to you. And keep in mind, the situation is far from over in regards to the Fed raising rates, in regards to the volatility. This could, in theory, last years. So we'll talk about that later on throughout this weekend. So you guys definitely want to subscribe to the channel, like the video, comment down below, but stay tuned for follow-up videos, because all of this information, I mean, goes together like peanut butter and jelly, baby. So that is it, guys. You guys enjoy the rest of your weekend. Enjoy the rest of your day. If you guys take Fridays off, who knows? A lot of people look like they take Fridays off. You guys enjoy the rest of your day, and I will see you in the next one.